And good evening. This is the Elliott Wave update for the NASDAQ 100 for Wednesday, April 13th, 2022. I got to start today by saying, the market's always got a little surprise up its sleeve for me, I guess for all of us. And it's reactions to the 2 days where we got higher inflation reports from the CPI and the PPI. And they decided, no, that's okay, and we're just going to buy it anyway, was actually a little bit stunning to me. And the reason this is because I feel that what's really behind it is not anything that has to do with, gee, we're getting bullish on inflation, or that we feel the Fed's got it under control. I think it's nothing more than just manipulating the market in terms of getting ready for tomorrow's expiration. Now, I may be off base, and I may be off base for even hinting that that is what's behind the move. But it was definitively between yesterday and today, both creating a short squeeze. Yesterday's response after it was to take it all back and slide. And today, of course, that did not happen. So I've taken a step back and I've taken a look. And as I left it yesterday, you'll notice that I've changed the internal count that we've got going on so far. It doesn't include the side steps that we're taking. What it does is it brings down that minor wave one of 3 all the way down to the low that we had at 13,902, almost 903. And the reason I do that is basically because of these two reactions and how the market has moved. And that what it would suggest is that we again subdivided. And so as I left it last night, this was a sub-minute wave 1, and this was a sub-minute wave 2. Then we get it again and again, high, a little bit, equaling the low, but actually a little bit lower low, and then a rally. So the only way you could count it is a sub, and it's just too many subdivisions to really fit the picture to what we're doing, to what actually the market is doing. So as I took a step back and I realized, well, I have a 1, 2, 3, 4, 5. First 5 down, minor degree. The first minor, it's a minor degree first wave of an intermediate degree third wave. What's going to be inside of that first wave down, or inside of the intermediate third, is going to be 5 waves of minor degree. So again, as I started yesterday, that is normally how I start. Minor 1, minor 2, and then it starts to subdivide. But once I can get a clearer picture, I can, and normally do, switch it back around. There's too many subdivisions. And as soon as I got today's, I thought, nah, too many subdivisions in an existing decline. And it would just go on and go on and go on and go on and go on. Whereas I could take it back and to realize I had a 1, a 2, a 3, a 4, and a 5. So I can put the minor 1 here. So we're still in that same space where the overall decline is going to be large and it's going to be deep. And basically now we've just given more room for this minor third wave, which is what we'll expect once this is all done, to truly just kick in. Instead of having it to have to kick in here and then count all these subdivisions, it can kick in and it would likely fit more. Because again, even though, as I said yesterday, that we come down, we climb the wall, we drop. We climb up, we drop. We climbed up, we dropped. It fell off the cliff, fell off the cliff, fell off the cliff. So those happen to just fit within just a 5 waves down. And then this one A B wave. B waves are very deceptive or very deceiving. I don't care what degree they're in. It carries the same characteristics. And so again, taking that step back clears things up. Today's action helped me clear things up in terms of what the count truly may be. Now, again, maybe I'm going to have to go back and it's going to be a bunch of subdivisions and yet another one. But I again, with the experience that I have with Elliott Wave and using it and putting it together, one of the things that Elliott stated in his own writings, and Robert Prechter and Don Ascani, who were my teachers, both said to me that it's got to look right and it has to feel right. And if it doesn't, then you need to go back and take a look at your count as it exists and see where you might make some changes. And that's pretty much what I did. Because when I got down to it, I thought, oh, I'd have to throw in another subdivision here. I thought, no, it's not beginning to look right or feel right. So that's when I stood back and I saw the 5 and I put the minor 1. So we're going to go with that for right now. To be honest with you, it still carries some pretty severe downside action waiting to kick in. So as I've continued to say all along, we're in the beginning stages of this intermediate third wave. And if we take it up one more notch and I were to look at the daily, we're in the beginning stages of this longer term decline, a much longer term decline than what I think the market is actually going on. So all of this nonsense that we're getting off of our hourly charts, it by no means suggests, for one, to me anyway, that, oh, gee, inflation's all taken care of. In the short period that it's really kind of, we've been feeling it, that just because we get 2 reports that show it's increased, oh, it's under control, we got it. Nonsense. Do not read into this bullish activity we saw today as anything more than short covering and in preparation for tomorrow's expiration, where these big market makers or traders want these stocks to go out. Again, tomorrow is a monthly, so it's a little bit bigger. So it's a monthly expiration again. So we just said, remember in April, we had a huge amount, $3.6 trillion settle on the March the 18th. I do not know what that number is going to look like for tomorrow. I will keep an eye out to see if we get a report on it. But I have been under the impression that a lot of the larger players, the larger companies, the larger brokers, the larger banks are basically getting behind in terms of having to close positions. And so again, not knowing what those positions are, not knowing what level they're at, I can only start to make some assumptions, and I know that's not the correct word, but I can only start to make some assumptions of what they were doing, particularly to see Apple. It became very clear early on. It's like, oh, they wanted above 170 for that expiration. Amazon suddenly catching fire. And then they put out this news story. Oh, Amazon to add inflation and fuel surcharge to US sellers. Oh, now if that's the reason that they're putting out there for Amazon going up almost $100 today, well, that's nuts. But $3,100 for their expiration isn't. Okay, so if we come down our list, Facebook 214, they'll look at, trust me, they're looking for 215 to 220. Google, what are they looking for? 2,600. So when you start to go in and see where the open interest is in these options, you start to see what this push is going to be. I'm waiting for tomorrow for Microsoft to force its way back above 290. Again, we have NVIDIA, 225 to 230. We have Tesla back above 1,000 after cruising cleanly below it yesterday and the day before. So here we sit. Now we're back up 1025. Now then 1050 is going to come into play. 1040 can come into play. So we have a lot of strike prices, and you saw how easily they were able to push it up today. So tomorrow, this will be the same deal. Friday's a holiday, so the market is closed. Tomorrow's the expiration. So we're going to have hopefully a fairly busy day. And a lot, and my expectation is, as far as the market goes, if this is indeed the C wave, I got 1 of C, 2 of C, 3 of C, a little 4 of C, we get a 5 of C. And that's my target that I'm now looking at. I'm looking for it to come up to the 200 period moving average on the hourly 200, which right now sits at 14,393. But it would not surprise me to see them go for 14,400 or higher. And this is after dipping below 13,900 2 days ago. So, or actually 1 day ago. So to see this type of swings in the market without any relieving news, so to speak, like a big correction has happened or a big solution has come about to what's going on with our country, or what's going on in the Ukraine, or all the things that are kind of plaguing us, there's been no settling news. It was nothing more than just come in and buy it today. And what are we going to use? Probably the same excuse they used yesterday. CPI, oh yeah, that was a bullish number, came in less than what we expected. Today's, on the producer level, came in higher than expected. They bought it anyway. So again, my thought is that it's because of tomorrow's expiration. And I would expect it to continue tomorrow. And that all these stocks now, they're going to be held up above those levels. So we'll see what happens. But my expectation for tomorrow would be that we need to complete this minor wave 2 now. And so we need a C wave to finish going up. So we have a 1, 2, 3 of C, a little 4 of C. I'm not expecting much to come off. In fact, we may have already completed, but I'm not sure. We get a little 4 of C and then a 5 of C that brings us all into here. That'll complete it. And then what I would expect after that, now whether it starts tomorrow or whether it doesn't, again, is falling off the cliff. That's what we got. That's what we get to look forward to. Whether it starts tomorrow or we're going to have to wait over the weekend, and it'll begin maybe on Sunday, on Easter Sunday, when Globex reopens, to have that maybe possibility where it would happen. Now, again, just speaking of Globex, Globex will be open and trading will be available in our markets on Friday morning. And I believe it goes to 1 o'clock Eastern. So 10 o'clock Pacific, 1 o'clock Eastern for the Globex session. And then it's closed until Globex reopens on Sunday evening. Okay, so for tomorrow, again, just to repeat, I am expecting higher levels. And will it come with the same intensities today? I don't know. We'll wait, we'll see. But I am looking for higher levels. I'll mark it as a completion point for a minor wave 2, and then I'll be looking for the market to continue to move lower. Now, what I will do before I head out or just finish this for today, I don't have that endpoint, so I'm only going to be able to put in an estimate of what we might be able to expect, but it cleans up a lot of that Fibonacci. So we can come down here to that low. I'm going to take it up to that moving average. So that's why it's an estimate. So if we get into a minor third wave, it's got to be longer than that minor 1. Now we're coming down in a minor third, possibly 12,133. Again, I continue to believe that the intermediate third will end below 10,000. So with that 9,070 level, I think was what we had, that remains valid. because I will go back and just to see, I actually need to go out to the weekly so I can do it. No, I don't. Let me go down to my daily chart. Okay, on the daily, I'm going to go here. We're going to replace the other, which goes down to 1 and up to the high of wave 2. And go a little bit higher. Come on, go move. Boy, I tell you, come on. Oh, shoot. Let me just put that on straight so I get a good level. It did not end there. It ended at 268.25. Okay, midpoint. We'll just leave it like there for right now. And so we can see on an intermediate wave 2, we're still down, well, 9,063, so 9,070. That's still in play. So it's the intermediate second wave in its total and its totality that would bring us all the way down. So even coming back to my hourly chart and pulling that open again, so 12,000, well, yeah, okay, I can go with that. We get a little wave 4, and that wave 5 would be expected to drop the market over 1,000 points, over actually 3,000 points. So wave 3, minor wave 3, could bring us down to here. And it could bring us a lot lower just to set this whole thing up. A minor 3, then we get a minor 4 and a minor 5, and that would then complete intermediate. So again, we have a lot to go on. We have a lot to cover in terms of the waves ahead. So we'll take it one step at a time. So again, tomorrow, expiration. Look for stocks to kind of get put around to where options are trading and where they want them to go out. And so I expect some activity in both directions, actually. But I personally am looking for a little bit higher. I'm pegging it up here at the 200 right now. But once that definitive number is in, then I'll reset the fib, the retracement, so that we get a more accurate number coming off. But once that's done, that's what I'll be looking for, is for the minor third wave to begin. Okay, that's where I'm going to end it. Now, we are open tomorrow, but I won't be making any updates tomorrow simply because Friday's a holiday. So my next update will be on Sunday, the 17th. It's a nice little spread of time in there. Unless something truly bizarre happens between now and Sunday, so whether with tomorrow or even within that Globex, or something happens in our world, I would then make an interim update in between. But otherwise, the next update on the markets will be on Sunday, the 17th. Have a great trading day tomorrow. Have a great holiday on Friday for your day off. Enjoy the Easter weekend, and check it back in with everybody